What's happening, Bitcoin Bulletin viewers? The market is moving faster than ever, and if you're not plugged in, you're missing out on the biggest plays. Get ready for the absolute must-know updates you need to stay ahead of the curve. We've got a massive story about institutional players making big moves, a deep dive into how companies are standing out in the crypto space, a major acquisition announcement, and a crucial look at the latest charts. Stick around, because you don't want to miss this. First up, are institutional whales quietly stockpiling Bitcoin as ETFs now hold more than Satoshi's stash. We're breaking down the numbers and what it means for the market. Then, we're exploring 9 unique ways Bitcoin treasury companies can actually differentiate themselves in today's super crowded market. Next, a major company just announced its third Bitcoin purchase in just 8 days, pushing their total holdings to nearly 700 BTC. What's the strategy behind this rapid accumulation? And finally, we're getting a daily chart alert with bulls steadying the market late this week. What does the technical picture tell us? Don't go anywhere. Make sure you're subscribed and hit that notification bell so you never miss an update. Let's dive in. Whales amass digital gold. The cryptocurrency market is buzzing with activity as Bitcoin experiences significant price fluctuations and a surge in trading volume. Recent data reveals that Bitcoin dipped below $115,000, accompanied by a substantial $90 billion trading volume spike. This volatility led to approximately $300 million in liquidations across the market, indicating heightened trading intensity and potential risk for leveraged positions. However, this surge in volume, particularly on platforms like Binance, where BTC spot volume exceeded $6 billion, is being interpreted by some analysts as a positive sign of increased institutional and large trader participation. This pattern often signals an accumulation phase, where market participants buy during price pullbacks, suggesting potential stabilization and a future trend reversal. Adding to the bullish sentiment is the remarkable growth of U.S. spot Bitcoin exchange-traded funds, ETFs. As of August 17, 2025, these ETFs collectively hold a staggering 1.25 million BTC, a figure that now surpasses the estimated holdings of Satoshi Nakamoto, the pseudonymous creator of Bitcoin, who is believed to possess around 1.096 million BTC. This milestone highlights a significant shift in Bitcoin ownership, moving from early adopters to a more regulated and institutionalized framework. BlackRock's iShares Bitcoin Trust, IBIT, is leading this charge, holding nearly 60% of the total Bitcoin held by U.S. ETFs, with 748,968 BTC. Fidelity's Wise Origin Bitcoin Fund, FBTC, follows, holding 199,798 BTC. Together, BlackRock and Fidelity account for over 75% of the market share among U.S. Bitcoin ETFs, while Grayscale's GBTC has seen its holdings decrease significantly since converting to an ETF. The rapid expansion of these ETFs is attributed to a more favorable regulatory environment, particularly following an executive order in August 2025 that allowed retirement funds to invest in Bitcoin. This regulatory clarity has removed significant compliance hurdles for large institutions, encouraging broader adoption. Analysts note that this institutional demand is helping to reduce selling pressure from whales or large Bitcoin holders, as evidenced by declining deposit volumes on exchanges. Despite the positive trends, market analysts are cautioning about potential volatility, especially in September. Some predict a challenging period as Bitcoin hovers around the $115,000 mark, with potential for increased selling pressure in the short term. However, the long-term outlook remains optimistic, with some experts, like Bitwise CIO Matthew Sigel, forecasting a year-end price target of $180,000, driven by continued institutional accumulation. The evolving market structure, with ETFs becoming a dominant force, signifies Bitcoin's increasing integration into traditional finance and suggests a maturing asset class. This influx of institutional capital and the growing dominance of ETFs mark a pivotal moment for Bitcoin, transitioning its perception from a fringe digital asset to a recognized investment vehicle. The combined holdings of U.S. spot Bitcoin ETFs now exceeding Satoshi's stash, is a powerful symbol of this transformation, indicating a new era of mainstream adoption and influence. Now, what does it take for companies holding Bitcoin to truly stand out? We're diving into the strategies that set firms apart in a crowded crypto landscape. Standing out in the Bitcoin treasury arena. In the rapidly evolving landscape of corporate Bitcoin treasuries, simply holding Bitcoin is no longer a sufficient differentiator. 5 years ago, companies like MicroStrategy demonstrated the power of converting idle cash into Bitcoin, electrifying markets and rewriting corporate playbooks. However, the market has since become saturated, with dozens of public companies across multiple continents now adopting Bitcoin treasury strategies, alongside the significant inflows into Bitcoin ETFs and El Salvador's adoption as a sovereign reserve asset. In this competitive environment, the declaration, "We own Bitcoin," carries little weight on its own. Companies must now assemble alternative sources of firepower to capture shareholder attention and maintain their market-adjusted net asset value, (MNAV) premiums. Without these strategic advantages, momentum can stall, media cycles fade, and MNAV can erode towards or below parity. Jurisdiction plays a critical role in shaping a company's financial strategy. It influences the cost of capital, the composition of the investor base, and the array of corporate financial instruments available. For instance, in Japan, ultra-low interest rates and NISA eligibility create favorable conditions for zero-coupon, premium-redeemable debt, and retail inflows. In France, PPME regulations transform qualified equities into long-horizon, tax-advantaged vehicles suitable for controlled floats and large at-the-market (ATM) offerings. In the U.S., fair value accounting and deep capital markets allow for layered financing structures, including convertibles, secured bonds, preferred stocks, and ATMs. Other jurisdictions like the UK, Sweden, Canada, and Brazil offer unique wrappers and local capital habits that create distinct demand curves for equities, even when local ETF options are limited or structured differently. Therefore, geography should be treated as a strategic capital tool, amplifying the intended shareholder mix, funding cadence, and corporate narrative. Furthermore, the operational structure and communication strategy are paramount. Appointing a dedicated head of Bitcoin strategy can concentrate credibility, translate complex treasury moves into accessible updates, and serve as a public interface with the Bitcoin community. A seasoned Bitcoiner in such a visible, accountable role acts as leverage for investor relations, IR, reducing mispricing risk, accelerating investor consensus, and transforming operational steps into earned media. The funding strategy itself is as crucial as the asset held. Different financial instruments tap into distinct investor pools and tell varied stories. A well-designed capital stack diversifies counterparty types, sequences issuances to maintain a consistent purchase cadence, and presents a clear, repeatable narrative about how capital is converted into Bitcoin per share without excessive dilution. Treating the capital stack as a scalable product line, capable of segmentation and repeated sales, is key. Achieving depth in capital markets means more than just accessing large markets. It involves securing pre-committed or quickly addressable channels that enable continuous raising, deployment, signaling, and repetition without interruption. This creates a flywheel effect. Issuance leads to Bitcoin purchases, which improve key performance indicators, KPIs, attracting further coverage, enabling larger issuances, and perpetuating the cycle. Without depth, companies might complete one raise, make a notable purchase, and then disappear from the news cycle for quarters, allowing skeptics to shape the narrative and compressing MNAV. Discipline in execution, visible through speed, sequencing, and robust risk controls, is rewarded by markets, lowering the cost of capital and sustaining the ability to repeat the accumulation cycle. Finally, operational profits serve as the lifeblood for sustained Bitcoin accumulation. While external capital acts as an accelerant, operating cash flow provides the essential oxygen. Companies that fund a portion of their Bitcoin acquisitions from profits build an organic stacking engine that is not dependent on market sentiment or the availability of external funding. This approach treats profits as a perpetual reserve replacement plan, where the business actively mints reserves. Exemplary IR practices also play a critical role, as premiums are a function of information symmetry. Markets penalize opacity with parity pricing, but reward clarity with durable premiums. By collapsing uncertainty quickly and clearly, companies can defend their premiums. Visibility, coupled with substance, is crucial for attracting incremental buyers. Uplisting and cross-listing on exchanges expand the addressable investor base, improve liquidity, and tighten spreads, all contributing to sustained premiums. Ultimately, companies that build financial firepower, maintain operational tempo, and design their capital strategies effectively are best positioned to thrive in the competitive Bitcoin treasury market. And speaking of companies making bold moves, one firm just announced its third Bitcoin purchase in just 8 days. We're breaking down the details of this aggressive accumulation strategy next. DDC Enterprise accelerates Bitcoin accumulation. DDC Enterprise Limited, a company recognized for its dual role as a global Asian food platform and a pioneer in corporate Bitcoin treasury strategies, has announced its third Bitcoin purchase within an 8-day period. The company acquired an additional 100 Bitcoin, BTC, bringing its total holdings to an impressive 688 BTC. This latest acquisition underscores DDC's commitment to rapidly expanding its Bitcoin reserves, signaling a significant acceleration in its accumulation strategy. Norma Chu, founder, chairwoman, and CEO of DDC Enterprise Limited, expressed enthusiasm about the company's aggressive acquisition pace. "We are accelerating the pace of our Bitcoin acquisitions," Chu stated. "Our recent momentum was made possible because we invested the time to build a strong foundation and the right partnerships. We are here for the long haul, and patience in preparation pays off in execution. With each step forward, we move closer to our goal of 10,000 BTC by the end of 2025. This strategic push towards accumulating a substantial Bitcoin reserve is a bold move in the corporate finance world. DDC Enterprise has positioned Bitcoin as a core component of its financial architecture, integrating it alongside its established portfolio of culinary brands, which include Day Day Cook, Nane Lim, and Yai's Thai. By allocating significant capital towards Bitcoin, DDC is not only hedging against potential inflation and currency devaluation, but also signaling a strong belief in the long-term value proposition of the cryptocurrency. The company's ambitious target of holding 10,000 BTC by the end of 2025 demonstrates a clear vision and a determined execution plan. The rapid succession of purchases suggests a well-defined strategy, likely involving favorable market entry points and a robust funding mechanism. Companies that successfully integrate Bitcoin into their treasury operations often do so by leveraging existing cash flows, issuing corporate debt, or utilizing equity offerings. DDC's ability to execute 3 significant purchases in such a short timeframe indicates strong financial management and strategic foresight. Building the necessary foundation and partnerships, as mentioned by Chu, is crucial for such rapid execution, ensuring that the company can acquire assets efficiently and manage the associated risks. The market watches closely as companies like DDC Enterprise lead the charge in adopting Bitcoin as a reserve asset. This trend signifies a broader acceptance and integration of digital assets into mainstream corporate finance. The success of these early adopters could pave the way for more companies to follow suit, further driving institutional adoption and potentially impacting the broader cryptocurrency market. DDC's clear objective and consistent execution provide a compelling case study for other corporations considering similar strategies. While the company's forward-looking statements are subject to various risks and uncertainties inherent in the cryptocurrency market and regulatory landscape, DDC's proactive approach and clear communication regarding its Bitcoin strategy position it as a notable player in this emerging corporate finance trend. Investors and market observers will be keen to see how DDC Enterprise progresses towards its ambitious 10,000 BTC goal, and how its Bitcoin holdings contribute to its overall financial health and market performance. Now that we've seen a major acquisition, let's turn our attention to the charts. We're getting a daily chart alert that could signal key market movements. Bitcoin charts show bullish signs amid market stabilization. Market analyst Jim Wyckoff, a seasoned veteran with over 25 years of experience in financial, stock, and commodity markets, has provided a daily chart alert indicating that bulls are steadying the market late this week. Wyckoff, known for his work with Dow Jones Newswires and TraderPlanet.com, offers insights into market trends based on technical analysis. His latest assessment suggests a positive shift in market sentiment, with bullish forces gaining traction. This comes at a time when Bitcoin has experienced recent volatility, including dips below key price levels and significant trading volumes. The ability of bulls to stabilize the market indicates resilience and a potential for upward price movement. Wyckoff's analysis often focuses on identifying patterns and indicators that signal shifts in market control between buyers, bulls, and sellers, bears. The current market environment, characterized by increased institutional interest through ETFs and corporate treasuries, provides a backdrop for technical analysis. While fundamental factors like regulatory news and adoption rates drive long-term trends, technical indicators offer crucial short-term insights into price action and market psychology. The stabilization late this week suggests that recent selling pressure may be abating, and buyers are stepping in to support the price. Wyckoff's advisory service, Jim Wyckoff on the Markets, provides educational and analytical content for traders and investors. His expertise spans across various markets, including commodities and equities, giving him a broad perspective on market dynamics. For those following Bitcoin's price action, understanding these technical signals is vital for navigating the market effectively. A steadying of the market by bulls typically precedes a potential breakout or a sustained upward trend, provided key resistance levels are overcome. As the market digests recent developments, including significant institutional inflows and corporate Bitcoin acquisitions, the technical picture painted by analysts like Wyckoff becomes increasingly important. The interplay between these fundamental shifts and technical indicators will shape Bitcoin's trajectory in the coming days and weeks. The focus remains on whether the current stabilization can translate into sustained buying pressure and new price highs. That's our look at the charts for today. But before you go, we've got a quick recap of all the top stories. Stay tuned. All right, let's do a quick recap. Institutional whales are quietly stockpiling Bitcoin as ETFs now hold more than Satoshi's stash. We explored 9 ways Bitcoin treasury companies can differentiate themselves in a crowded market. DDC Enterprise announced its third Bitcoin purchase in just 8 days, acquiring another 100 BTC. And finally, bulls are steadying the market late this week, according to daily chart alerts. That's all for today's Bitcoin Bulletin. If you found this information valuable, make sure to hit that like button, subscribe to the channel for more daily updates, and ring that notification bell so you don't miss a single move. Also, follow us on all our social media channels for real-time news and analysis. Thanks for watching, and we'll see you in the next one.